And oil prices were lower in the afternoon of Asia trading hours of Thursday, with international benchmark Brent crude futures falling 0.22% to $72.07 a barrel. U.S. crude futures slipped 0.14% to $70.20 per barrel. On Wednesday, prices rose more than 4%, extending gains as improved risk appetite provided support, despite data showing an expected rise in U.S. oil inventories. And now for updates on the oil markets and other commodities-related issues, Desola Simoni, research analyst with financial derivatives company, joins us now. Great to have you, Desola. Good morning.
Good morning, Lady. Thank you for having me on the show.
Yeah, so oil prices gained 1.86% yesterday to $70.64 a barrel, despite surge in COVID infections, expected fresh oil from OPEC. What's pushing oil at this time?
Thank you for the question, Ladi. As you have seen, oil prices have been very, very volatile this week. I mean, from Sunday when OPEC agreed to increase their production outputs, to increase their output, and then to the issues around rising coronavirus cases in key economies in the UK, in the US, and in Asia. And now with bigger than expected build-up in US crude stockpiles, analysts were expecting a drawdown of about 4.5 million barrels last week, but instead we saw a surprise build-up of about 2.1 million barrels per day. So all these factors were weighing on oil prices, or were supposed to drive oil prices downwards. However, we saw yesterday oil prices trending upwards surprisingly, and that was driven by a risk-on appetite. We saw suddenly investors had improved appetite for risky assets, and they were buying a lot of oil, and that's part of why we saw oil prices rise yesterday. But again, like you said, today oil prices are lower now, and we expect oil prices to remain volatile in the next coming weeks.
Now, the big investment banks, JP Morgan, Goldman Sachs, and Citibank, see oil reaching $80 per barrel by end of 2021. What's your view on this forecast?
I think that's a little bit too optimistic because I mean, and their forecast, right, is hinged on improved oil demand growth and a tight oil market essentially. So they are betting on a strong a strong economic recovery and strong oil demand growth with supply remaining constrained. And they have the view that even with the improved supply coming from OPEC, that's like the increase in supply about 400,000 barrels per day starting August. They think that is still supportive of the market, and they forecast that the market will still be undersupplied by around 300,000 barrels a day for the next 12 to 18 months. So those are the factors on which they base their forecast. However, one factor that they are now beginning to take into consideration is the fact that despite vaccination is rolling out at pace, being vaccinated does not mean that a person cannot contract coronavirus or a person cannot spread it. For instance, here in the UK, around like 88% of the adult population have been vaccinated, and I've received a first jab of the vaccine of coronavirus vaccination, and around 66% have received double doses of the vaccination. Yet, over the weekend, or I think early in the week, we still had the sharpest increase in coronavirus cases since January. So that just suggests that despite the vaccination, we can still have these spikes in new cases, and that could introduce new restrictions. For instance, the United States has urged the citizens not to travel to the UK. That is going to affect demand for air travel, jet oil, for instance. So what I'm saying is that we're a little bit optimistic, and we feel like a more conservative estimate is somewhere around $65 to $75 per barrel.
All right, I guess I'm not going to work with that projection. Well, bringing it down to Nigeria, we've seen sustained downward trend in the external reserves balance of the country, despite the continued recovery in oil price. This trend has stoked concerns about the ability of the country to support the import of goods. What are your thoughts around the external reserve and imports sustainability?
Like you mentioned, Ladi, the level of external reserves have been trending downwards. Yet to date, I think it's down now about 7% year to date, but in the last few months, the decline has been flatter. So this month, month to date, external reserves was down just, I think, 0.5%, so which is good. And one of the reasons is because of, like you mentioned, despite the fact that oil prices were elevated in the global oil market, Nigeria's production was constrained in compliance with the OPEC production quota, which was 1.4 million barrels per day. And also the central bank kept on, injecting FX into the market. I think in Q2, the central bank injected an average of $114 million into the FX market. So that's, that's part of the contributory factors that contributed to the depletion of the external reserves. But in terms of import cover, I'm not too worried. Nigeria's import cover is around 8 months. Nigeria has around 8 months of import cover, and the recommended rule of thumb, or the recommended threshold for developing countries, is around 3 months. So in that sense, I think Nigeria is in a good space in terms of import cover. And now with oil prices rising and with more room in terms of production quota, Nigeria's new production quota is around 1.8 million barrels per day. So with that, I think that we will receive higher oil receipts, which will be supportive of our external reserves and which will increase import cover.
Now, given this trend on the oil market, what should we expect in terms of Naira stability?
I think it's positive, right? So we think if despite everything that is going on, despite the fact that we expect some more volatility in the oil market, we think that prices will still remain elevated in the near term because the oil demand growth has still not reached pre-pandemic levels. So there's still room for growth in oil demand growth, and the increase in production from OPEC is still supportive of a tight market. And I agree with the big banks when they say that they still expect the market to be undersupplied. So in that sense, we expect prices to remain elevated, and Nigeria now has more room to produce more oil. So we think that in the near term, at least the near to medium term, we'll have higher oil receipts, which is positive for our level of external reserves, and which would kind of is also positive for our external balance in terms of balance of trade. I think we'll narrow our deficit or move to a surplus in this higher oil environment. I think that's positive for our external reserves and also reduce some pressure on the exchange rate. So I think it's positive for our exchange rate as well.
No, but if oil prices continue to rise, Nigerians may end up paying more for petrol. And the DPR just, clarified a statement attributed to it, saying that unless alternative sources of energy, which will act as price buffers, are created, the price of PMS, could be subject to prevailing market prices. What other sources of energy are we looking at here?
So Nigerians will only pay higher oil prices, higher PMS prices, if the subsidy is the fuel subsidy or the what is called under recovery purchase, if that is removed. To my knowledge, that is still remain. That's the subsidy still remains and should likely remain up until the end of the year. So I don't see Nigerians paying higher PMS prices anytime soon. So, but in terms of alternative energy sources, I think that's off the top of my mind. I think electricity, but Nigeria is not ready to have electricity-powered cars like Teslas and the likes here. Or an alternative also is a natural gas, and that is a more, I think, long-term approach. So in the immediate term, or what is visible immediately, I think would be to revamp the refineries. We've had a discussion before, Ladi, to revamp the refineries and also to revamp the refineries or to build new refineries. In that way, even if oil prices increase, Nigerians won't pay more for oil because we'll not be importing much oil. We'll be refining our PMS locally.
Yeah, talking about revamping the refinery, of course, the NNPC says the Port Harcourt refinery will come online in September 2022. Remember the rehabilitation that is going on after paying $1.5 billion for that. But one would wonder how feasible this is.
For lack of a better word, Chimeze, no be today. Like we've had these discussions before. In the last 12 years, the Nigerian government has tried and failed, or tried unsuccessfully, to revamp the refineries 4 times. The latest one, the most recent one being in 2019. obviously, in theory, if it is done, if, for instance, the Port Harcourt refinery is the largest refinery in Nigeria, the largest government-owned refinery in Nigeria, and it has an installed capacity of, I think, 210,000 barrels per stream day. So that is like about a third of Nigeria's oil consumption, which is good. If they can, if Nigeria can make it work, it is positive in the sense that, to reduce Nigeria's fuel import bill, right? And it will support the external reserves and support the exchange rate as well. That's if it can be done. But we've been here before. We've had this discussion. And my own question is, how is this different for the other times when the government has tried unsuccessfully? I mean, I read up that, it's being managed by foreign firms. I think the African Export-Import Bank is involved. Until we start pumping oil for at least 6 to 12 months. And, we start refining until it comes online and starts pumping oil for like 6 to 12 months before myself and other Nigerians will believe that, okay, this is actually the real deal. This actually works this time. Up until then, I think we remain very, very skeptical.
All right, let's look at other commodities now. Now that the festivities are over, even though I and Chimmy didn't get any ram, do you think that commodity prices will taper down? And where do you see prices near term?
I think prices will remain elevated in the near term because, yes, there was this huge demand coming from the festivities, but for more fundamentally, the drivers of domestic commodities prices are the level of insecurity, especially in the growing areas. First of all, for the farmers to plant their crops, but also for transporting the harvest from the north or from the middle belt where they are planted down. I think because of the high level of insecurity, commodities prices will still remain elevated in the near term. I'll give an example. Look at the price of tomatoes. Over this month, it has increased for a 50 kg basket of tomatoes. It has increased 140% to 60,000 naira. That was not driven by demand from Salah. It was mainly driven by this level of insecurity, and now add the flooding. Those factors, I think, are constraining supply, and because of that, we expect the prices to remain elevated in the near term. Unfortunately.
All right. Thank you very much, Desola, for your time with us this morning. We do appreciate it. Enjoy the rest of the day.
Thank you for having me.
We'll take a break now. When we come back, of course, markets resume after the Eid holiday. What do we expect? These and more in a moment.